Are you seeking an alternative to an SBA loan for a business acquisition or a debt restructuring for your business? Well, I may have a solution for you with a non-SBA conventional loan. SBA 7A terms only go up to $5 million. This product goes from $500,000 all the way up to $15 million. For a business acquisition, there could be zero to minimal equity injection requirements, 25-year full amortization loans, foreign ownership is acceptable, and we can refinance merchant cash advances, with another highlight being flexible buyout structures that banks won't touch. So first of all, comparing a conventional loan to an SBA 7A. SBA 7A only has up to $5 million terms. This has up to $15 million. So for deals that fall outside of the SBA limits, this could be a solution. SBA loans also have very limiting guidelines when it comes to ownership structure. With an SBA loan, you may be running into issues with the seller note. If the seller note is being counted towards a capital injection, with an SBA loan, the note must be on full standby to the loan. That could be for 10 years. And if the seller note is not counting towards the equity injection, they still may need to hold that note on standby for 24 months. And if the seller retains any equity with an SBA loan under 20%, they may be required to personally guarantee for 24 months. And if they hold 20% or more equity post-close, they would have to guarantee the entire loan. And that does not even go into any other type of deferred equity, earn-out agreements, or any other kind of creative financing structures for the seller post-close. With the conventional business loan, we don't have those restrictions that an SBA loan does. So for deals that are larger than an SBA, this is a no-brainer. But even for deals that are under $5 million but have complex ownership structures post-close, this could be a better solution. Not to mention that with SBA loans, they no longer allow even 1% of the business to be owned by someone who's not a U.S. citizen. So that could be a limiting factor altogether. So the conventional loan will work with these structures. The loans still go up to 25-year terms. The closing fees on this are somewhere around 3%, very similar to an SBA. The timeline to close these loans are 45 to 60 days. Now, what can you use as collateral? Just comparing to an SBA loan. If an SBA loan, the proceeds are going towards real estate, and at least half of the proceeds are going towards the real estate the business will be occupying, then you can get 25-year terms. Or else you would have 10-year terms on the business acquisition and 25-year terms on the real estate portion. With this term loan, if we have at least 30% of the business secured by a first position of any real estate, we can get 25-year terms. If we have at least 50% of the loan secured by any real estate, we can get 25-year terms. That's again a key difference from an SBA, which would still use a personal home, an investment property, or other properties as collateral, but you can't get 25-year terms. With this loan, as long as we have at least 30% on a first position of real estate and at least 50% on a second position to secure the loan, we can then get 25-year terms. So in one example, if a business acquisition is for just $1 million, as for easy numbers, and $300,000 of that is going towards the real estate, in an SBA loan, that would get potentially 25 years on the real estate portion, and for the $700,000, you get 10-year terms. With a conventional loan, we can get 25-year terms on the entire amount. If you're looking for ways to finance your business acquisition or debt restructuring and running into issues with an SBA loan, but you have some real estate as collateral, contact me because this non-SBA conventional loan could be a great solution.